Fed minutes. Put rate hikes back on the table as war inflation hits 3.5%. The Federal Reserve released minutes from its March 17th and 18 meeting on April 8th, and the message was blunter than markets expected. A growing number of policymakers are prepared to raise interest rates if inflation refuses to fall back toward the 2% target. Bitcoin dropped below $71,000 in the hours following the release, trading at $70,182 as of April 9, 2026. Rate hikes are no longer hypothetical. 6 months ago, the consensus was straightforward. The Fed would cut rates in 2026. The question was how many times, not whether it would happen. That consensus is fracturing. Federal funds futures now price in a greater than 50% probability that the Fed will raise rates at least once before the end of 2026, according to MEXC's analysis of CME data. Beth Hammack, president of the Cleveland Fed, put it plainly in a separate appearance. I could see where we might need to raise rates if inflation stays persistently above our target. The minutes themselves stopped short of committing to hikes. But the language was pointed. Virtually all participants included higher 2026 inflation in their updated projections, and the majority noted that upside risks to inflation and downside risks to employment had both increased since the prior meeting. Oil is the transmission mechanism. The March meeting took place weeks after U.S. military action involving Iran triggered a surge in energy costs. Benchmark oil had already climbed from around $70 to $100 per barrel by mid-March. The minutes included staff-modeled scenarios projecting oil at $130 per barrel in a lower-impact Strait of Hormuz disruption and $167 per barrel in a more severe one. The higher scenario would add up to 1.47 percentage points to U.S. headline inflation. Gas prices have already responded. The national average hit $4.12 per gallon as of April 7th, up 80 cents in a single month. The Cleveland Fed's own real-time estimate puts March inflation at 3.5%, the highest reading since 2024 and well above the official PCE forecast of 2.7% for year-end 2026. Fed Chair Jerome Powell acknowledged the range of outcomes at the press conference following the March meeting. We did talk about alternative scenarios a little bit. It's very uncertain. We shouldn't assume it's going to be one thing or another. Chicago Fed President Austin Goolsbee was less measured. I was optimistic that we would get back to this path to 2% inflation, but yikes, it's going from orange to red lately. It's a troubling moment. How crypto is absorbing the shift. The crypto market had been riding a tentative recovery through early April, boosted by the U.S.-Iran ceasefire announced on April 6th. Bitcoin reclaimed $72,000 on the ceasefire news, with oil crashing 14% in a single session. The Fed minutes clawed back some of that gain. As of April 9th, BTC is at 7,782, 1.6% in 24 hours, ETH at 281, 2.7%, and SOL at 82.18, 3.0%. The Fear and Greed Index sits at 42 in neutral territory but leaning toward fear. The pullback is mild by historical standards, and that itself is telling. Crypto already spent 2 years repricing for a high-rate environment. A single 25 basis point hike would carry different weight than the 2022-2023 hiking cycle, which took the Fed funds rate from near zero to over 5%. The current rate already sits at that elevated level. A one-off increase would be a sentiment signal, not a structural repricing of capital costs. Where it gets more consequential is duration. If the Fed holds rates at 5.25% or higher through the rest of 2026 instead of cutting, that keeps the opportunity cost of holding non-yielding assets elevated. Bitcoin ETFs pulled in $591 million earlier this week, but sustained hawkishness could slow that pace. The ceasefire variable. The minutes were drafted before the April 6th ceasefire, which means the war-driven inflation assumptions in the March projections may already be partially stale. Oil dropped from above $100 to the high 80s after the ceasefire announcement. If that holds, the inflation path softens. But the Fed signaled it does not trust the durability of that relief. Powell's "we shouldn't assume" framing leaves the door open for any scenario. And the Cleveland Fed's 3.5% inflation estimate already incorporates March data, not forward-looking ceasefire effects. For crypto markets, this creates a two-track scenario. If the ceasefire holds and oil stays below $90, the rate hike probability fades and risk assets get room to run. If the ceasefire collapses or oil resettles above $100, the March minutes become a preview of actual policy tightening. BTC has traded between $68,000 and $72,000 for the past week. The next directional move likely depends more on the next CPI print and OPEC output data than on any single Fed speech.